Good morning, everyone. Thanks for watching the Chain Trends Crypto Podcast. Today, I have a very special guest with me, Mario Nawfal. Mario is the co-founder and CEO of NFT Tech. Mario, good morning. Thank you so much for joining.
What's up, man? How are you?
Doing well. Could we start just a little bit? Could you just tell the audience a little bit about your background and how you ended up in the crypto space?
Sure, man. I started business well before crypto. So I launched my first business in Australia. It was bootstrapped in 2010, I think. And the business is called Fruity. It's an e-com business based on health and wellness. Did really well. It still exists today. Had a record year last year, operates in over 30 countries. Now, I'm not personally involved, but I wish I still am. So I got into crypto in 2017. So wasn't a pivot. IBC, which still exists today. It's one of the biggest incubators and accelerators in the space, having great success, invests heavily in the space. So it's called IBC Group, International Blockchain Consulting. A year later, I became a partner at IBL, International Blockchain Legal. And then a year before that, so about a year and a bit ago, I became the CEO of NFT Tech, and I'm the co-founder as well. And that's, I'd look at it as a holding an IP company that gives exposure to retail investors to the NFT space. So we reserved the ticker NFT, and we're working to list on the stock market. We're expecting it late April, but we can't have a confirmed date under the ticker NFT. And then investors could purchase our stock to get exposure to the space, because understanding where to invest in the space is not easy at all, or getting the access to invest early is almost mission impossible.
Wow! So congratulations. That's a big deal. You said April. Is it a SPAC, or are you going public SPAC, or
it's a direct listing?
A direct listing. Wow! Congratulations. I missed that one thing. That's a big deal. Good for you.
Thank you.
So could we talk a little bit about what NFT Tech is again, and like some of the projects? Paint a picture of what it is and what its mission and vision is exactly.
Yeah. So I've been in crypto since 2017. Some people have been in crypto much earlier than I. But anyone that's been there for a while, you understand that getting access to deals and the right deals is not easy, especially during hype phases. People, VCs are fighting to get allocations. And understanding where to invest, understanding the space is not easy. I have people coming up to me saying, Mario, I found a Bored Ape for $4,000. I'm like, no, not every monkey is the same. And, those are not stupid people. They're pretty smart, but they just don't understand the space. They don't understand the concept of NFTs beyond those profile pics and digital art, which doesn't excite me that much. They don't understand what the metaverse is and the applications of NFTs as the atomic unit of the metaverse. They don't understand those things, but knowing where to deploy capital makes it really hard. A lot of fund managers don't know how to allocate those investments on their balance sheets. So simplifying it through a public company, being able to buy shares in a public company, getting access to this, and then us doing the hard work of getting early access to deals, finding out where to allocate the capital, where the space is heading, is something that the other two co-founders came up with the idea of doing that, and it's turning out to be a good strategy where we do the hard work. Investment opportunities out there.
And the NFT Tech is on the website, at least, it talks about three main focuses. One being NFTs, two being play to earn, and the other being the metaverse. I've also heard you talk about the multiverse in other episodes. Can you just talk a little bit about those three categories and differentiate, how you view the metaverse from the multiverse?
Yeah. So the metaverse includes NFTs and play to earn, because NFTs are, to me, the atomic unit of the metaverse, and I'll explain that in a bit. And then play to earn is like the early adopters of the metaverse. So, and that's gaming. Now I had a whole speech about this in TEDx a week ago where I explained the process of gaming evolving into a metaverse. But before doing that, I'll just define what the metaverse is. Now, I know most of your audience is probably understands crypto, they think they know that what the metaverse is, but I think they'll be surprised, because the metaverse is something that we already exist in today. Like right now, we're having this discussion and we're in the metaverse, but not the metaverse that we're all excited to see in a few years' time. Because essentially the metaverse is a digital representation of the physical world we live in today. So you look at various aspects of our life. What do? You wake up, you entertain yourself, maybe check out Instagram or check out your work messages. So we work, which is creating value. We socialize, we entertain ourselves. That kind of, those three things, there's two more that I forgot, but those three things include most of the things we do. Signal to the world, our identity, and belong in different communities. That will kind of come together. So those 5 things kind of represent everything we do beyond the survival instincts. So if you think about it, most of these things are moving to the web already, have already moved to the web. Conferences on Zoom, especially after COVID. So we're doing this interview 10 years ago, 20 years ago. That interview I'd have to be physically by your side with cameras and lighting and everything. So work is already moved to the web. I'm on WhatsApp all the time. I've got AirPods, 3 pairs of AirPods at all times with me. So I'm always on my AirPods. That's where I live. So our social life has already moved to the web. Signaling, there's already different ways to signal on the web. Instagram is obviously the most obvious example. Filters on Instagram are like the new makeup in that sense. And you've got communities forming on the web. So essentially, the digital representation of the physical world is already here, but it's not the form that crypto is going to be bringing. So what crypto will allow us to have, what NFTs will allow us to have, is a Web3 metaverse. What we're experiencing now is a Web2 metaverse, where central entities like Zoom or StreamYard, what we're using now, or YouTube or Google or Facebook or Instagram or TikTok, those are central entities that allow us to operate within their boundaries and laws. I'm not saying it's good or bad. I'm just saying what the web looks like today, Web 2.0. Web 3.0 included the concept of digital ownership into the game. So if you look at the physical life, and I said the metaverse is a digital representation of the physical world, well, I own this phone. I own these AirPods. I own this mic. I own the clothes. I own my identity. I'm traveling in a few days to Australia. Then I'm heading off to Turkey. I'll take my stuff with me because I own them, and I'll move from country or metaverse to country. So I'll move from one world to another with the stuff that I own. No one says I own them. They just in my home, in my pocket, in my bag, I own them. That can't exist on the web. You cannot actually own something without a central entity saying you own it. Whether it's money, where a financial institution is saying you own that money and on your screen, or Instagram saying this is your photo or video and they give you copyright rights to it. Now, when you include the concept of ownership, which is what NFTs are digital ownership. They're not pictures, they're not photos, they're not just art. They're the concept of ownership on the web. When you include that into the metaverse, now you can actually own your actual assets in any metaverse, starting with gaming. And that allows you the right to do whatever you want with them, but also the right to trade them on different platforms or OTC, over the counter, or move them from one metaverse to another as they become interoperable. So if you get a spaceship in one game, which, that's where play-to-earn gaming comes in, but if you have a spaceship in one game, let's say Sidus Heroes, you can take that spaceship and move it to another game like Star Atlas. We'll have utility on both worlds, along with other assets. I'm using spaceships as the example because it's easier to relate to it, especially that, that's where utility will start. It will be in the gaming space. And that's what we're expecting in like 5-10 years time, is to have that interoperability and to be able to move your assets, your NFTs, from one world to another, the same way you move your assets in one world to another in the physical world.
Yeah, that's a great explanation, especially when you talked about ownership. Recently had a guy named Charles Atkins on the podcast, and he described Web 1, Web 2, and Web 3. He said Web 1 was read, Web 2 was read and write, Web 3 was read, write, and own. And that was a great explanation, and the way you just put it was really, really a good way to think about it.
Yeah, the way I would put it is like Web 1 is info. Google dominated that. Web 2 is social. Meta or Facebook dominated that. Web 3 adds ownership.
Yeah, that's great. That's a really good lens to put on, definitely. Well, when you talk about let's see how I want to put this here. When you talk about putting the last part, when you just said after, what was the last part? What was the last thing that you just said? I wanted to
of course, the interoperability between different games, moving your asset from one game to another.
So really what we're talking about here, and I'm sorry for the brain fart there. It's like you could take like swords or whatever from one game to the next, right? And how far away are we from this interoperability? Now, and also, are you a proponent of like something like Polkadot? They claim to be a heterogeneous chain, like a layer 0, or are you like, what are you looking at in terms of interoperability?
Yeah, in terms of which protocol to put our effort in, it's just really hard to determine which protocols will be all the ones that everyone was excited about in 2017, no one talks about today. But in terms of where we see interoperability heading, from a non-techie person, when I speak to people smarter than me in the space, it's going to take a long time. I was the founder of Star Atlas. I'm really bad with names. What he said was that we're already struggling to figure out the economy, the game mechanics within our own game, on the different assets we're going to have, and how that's going to, how people are going to earn money, what role guilds are going to have to do in all this. And I'm a big fan of guilds and gaming guilds, and we have our own guild at NFT Tech. And then, so if we're struggling in the complexities of our own game, like, let's not even begin to think how we're going to allow assets from other games to get into our game and play a role there. So, how hard is it to build an economy today? Like, China running their economy, the US running its economy. Now, of course, all economies are intertwined, but if you build a new country and building up an economy from scratch, like China did, it's already complex enough to build your own economy, but within itself, standalone economy. And then you have to look at how all these different currencies play a role, how these different financial institutions from different countries begin to intertwine within your country. It's not easy. And that's in a very mature physical world that's existed for hundreds of years. Now, in the digital world, it's even more complex, because everything is, there's not even physics in the metaverse. Physics is replaced with code. So it becomes a lot more complex. Like, imagine other planets that exist today and completely separate societies, and we want to try to connect our society to theirs. It's going to be very difficult to have our assets give them utility on another completely different planet that's existed for hundreds of years. That's probably the best explanation that I could give, and trying to relate it to the physical world. But yeah, and this is something that we're focusing a lot on with our guilds as well, with our gaming guild.
Now, before the audience that doesn't really understand or know, what is a guild exactly, and especially how do they impact emerging markets and parts of the world that necessarily traditionally get at the end of the adoption curve?
Yeah, so guilds are fascinating for me, and I called our guild a gaming guild, but I probably want to take a step back. We just call it a guild. It's called Goat Guild, not Goat Gaming Guild. The reason it's called Goat Guild is I think gaming is the first step in something a lot more exciting. So I'll explain what a gaming guild is and why GG was probably the first mainstream guild. The concept of guilds has existed for a long time, but in the play to earn space, or now what we're calling play and earn, guilds play a very, very important role. So what's play to earn, or play and earn? Play to earn is essentially playing a game to earn money. It's that simple. Because now assets are turned into NFTs. Owning those NFTs allows you to trade them for other cryptos and then turn them to fiat. Trade them for stables. So let's look at Axie Infinity. When you play Axie Infinity, you get what's called, when you win the battle, you get what's called SLP, Smooth Love Potion, which is the native token, and that can be traded to any other crypto. But to play the game, to play Axie, to have different Axies battling each other, you have to buy an Axie. Axies cost money, hundreds of dollars. They used to cost thousands of dollars. And for many, that's too much money. It's not, people in third world countries can't afford that. But they would like to play the game because they can make more money playing the game than other work they do within their native country. So that's where guilds come in. They act like financial institutions where we loan those Axies, and I'm giving an example of Axie Infinity. Let's look at Sidus Hero. Sidus Heroes is a game I'm a big fan of. Let's look at Sidus Heroes. They look at games like they want to buy a spaceship, but it's too expensive for them. We buy the spaceship, and then we lend it to players who can use our spaceship and build empires and make money. And then the money that we make is split between the players and the guild. So that's how gaming guilds work. And they have a very important place in the ecosystem. Now, the reason I said I'm not too fascinated to call them a gaming guild, I'd just rather use the term guilds, because as the metaverse evolves, guilds will become a portal not only to play to earn and play and earn gaming, but they'll become a portal into the metaverse or the multiverse. And I forgot to explain the difference, which I will in a minute. So someone that wants to enter the metaverse, they need to learn about the metaverse, where a guild could be an educational platform. Okay, they want to build a business within the metaverse. A guild could become a financial institution and provide loans for them. It could become an incubator. So what a guild does to games, it can do to metaverses. And if you go back to what I said earlier, games are the early adopters of the metaverse. So games will essentially evolve and already are evolving into a metaverse. So Sidus Heroes is a game, but it's also a whole ecosystem, a whole galaxy where you can live, you can socialize, you can signal your wealth and your success, all the things that you do in day-to-day life. If you look at life itself, you can say that, the game of life. Life is a metaverse, is a game if you think about it. So, and I want to end it with the difference between metaverse and multiverse, because I skipped it earlier. So I talked about how there'll be all these different metaverses and you'll be able to move your assets from one to another, and the concept of interoperability. That's because anyone can create a metaverse. I can create the Mario metaverse, I can create 10 of them. The same way anyone can create a website. Okay, it's not too difficult. And there's a platform called BitCountry that allows anyone to create a metaverse, the same way Shopify allows everyone to create a website. All these different metaverses will exist in an ecosystem, the same way all these countries exist on the planet Earth, which functions based on physics. All these different ecosystems will operate within the multiverse. That's where the term multiverse comes up. And the multiverse can be like a code, whether one layer, one protocol, one solution, or just like the web, allowing all these different ecosystems to coexist. So that's how I use the term multiverse.
That's a great definition. So you're looking at, the metaverse is being aggregated into one multiverse. Now, before NFT Tech makes an investment, do you take a different approach to each sector? Do you take a different approach to NFTs than you do to DeFi, than you do to a traditional investment, than you would in the metaverse? Is there a specific selection process, or do you have a roundabout way and perspective that you go about selecting what you're going to invest in?
Yeah, a lot of it depends on the market. So I'll give you an example. At one stage, the market was so hot that every project that launched was doing a 10x or more. Every single project that launched. So then throwing money at projects, not really caring whether they're good or not, wasn't a really bad strategy. Now, it might sound bad to many people, but like throwing money, that's not the best term to use. But the reason it made sense is because there were projects launching every day. Vetting all these projects we were hiring like crazy. Vetting all these projects was really difficult. So we used a shotgun approach. We obviously not any project potential that didn't tick many of the boxes, wasn't mature enough. The team wasn't qualified enough. They didn't have strong backing. They didn't have an exchange. We didn't go deep into their tokenomics. We just don't have the time. We just invested. Best case scenario does well. Worst case scenario, they're doing a 10x. We could take out our principal after a few weeks or months and then let our profits ride. So it was a very low risk strategy that didn't take a lot of vetting. Now, we knew that wasn't sustainable. And then all VCs eventually started doing that because it was like a quick way to invest in many projects. And we landed on some great winners using that strategy. Some of the best projects we invested in were projects that we invested in during that hype period. Now, when there isn't crazy hype period, which I prefer because things are more stable, we could do things the right way and not rush things. Back then, you had days or hours to decide whether you want to invest or not. That's stupid. That's insane. But now that things are back to normal, there's a certain process we have in place. We tend to invest early in the private rounds, but we try to avoid the seed round. We come in the private round, generally speaking, because seed is a bit too risky for us. And I'm a pretty risk-averse person. We try to trust that we have our own vetting process, but we also try to trust our partners who do the vetting as well. So if we have, we share a lot of deals with other big names, Animoca, 3 Arrows Capital, Outlier Ventures, and those big names have existed for a while, and they have their own vetting process. We have our own. So when we send them a deal, they would take it seriously because it's gone through our vetting process, and vice versa. If we see them invest in a deal or they send us a deal, we're going to take it more seriously because it's gone through their vetting process. So signaling is the big one. We have our own vetting process of looking at token structure. I think something that's really ignored, and just across the table here, I had a good friend and business partner, Gaurav from TDFi, and they've partnered with my other company, IBC. They're working very closely. TDFi obsessed over token structure. IBC is known to be a marketing and community building machine. TDFi, they have their market maker, but they also build the token economics of a company, of a project. Token structure is something that's ignored by a lot of investors, but it could make or break a project. A flawed token structure is almost setting the project up for failure. And in the gaming space, in the metaverse, building the right structure, the right incentive structure for guilds to operate, for players to operate, and allowing it to be sustainable over decades, really, and allowing a mechanism and a solid DAO structure to allow the protocol to evolve as well as the space matures is extremely, extremely difficult. And even the smartest of us, struggle to get that right. So I would say this is something that's ignored by many in the space. Another thing that many get caught into hype. For example, I've been bearish on Bored Apes for the last few weeks and months. Obviously, timing is they could triple from now and then, because I just see a lot of hype behind it. I'm bearish towards a lot of these PFPs. I'm bearish towards a lot of the digital art. I don't want to use the word bearish. I'm skeptical or kind of sitting on the sidelines. Mm-hmm. But I know we will invest very heavily. I prefer to invest, though, when things quiet down, when not every project's pumping like crazy, when not every day new all-time highs are being made. Right now, tokens, altcoins corrected heavily in the last few weeks. That excites me heavily because now things are more normal. That's where we can invest for the next 3, 5, 10 years. So that's another thing I try to do: invest when there's blood in the waters, and be fearful when everyone's greedy.
It's great. That's Warren Buffett. I think that's something he talks about. Being greedy when others are fearful, and being fearful when others are greedy. And like you touched on, we're off. Some projects are 50, 60% off all-time highs. Could be a great entry point. Also noted that you're talking about long-term perspective and not timing the market, but time in the market, and that's also a really important message, I believe.
Yeah, I want to also add one more thing: is that the utility of a token is really important. So I see a lot of projects launching with promised utility. If you don't have utility, I'll give an example. There's a project we invested in called Blocktopia. A really good project, solid team. They're a metaverse play. And their token blew up after they launched. When I say blew up, I think it hit like 500-600x within a couple of months if you're a seed investor, which is insane numbers. You put in 50K, that's sitting at 30 mil or whatever.
Wow. Yeah.
So, and now corrected, I think it's sitting at 150x, which is still incredible. They launched a few months ago. But the reason they grew so quickly is they obsessed over utility and immediately started making deals with large companies, buying up their token or staking their token to be able to buy space within their metaverse, buy office space in their tower, or stake the token to participate in their launchpad. They had their utility figured out from day one. The result, extremely successful project. So I think a project should really obsess over their utility and have that utility active from day one. Another project we incubated called Faith Protocol, very new project, very, very new. And that launch did really well, one of the best launches of last month. And Faith is launched by a few private equity guys. The founder, his name is Wahid Pierre Chamas. Incredible guy, driven as hell. Very successful. He's a very successful investor, very well off financially, but yet still hustles like an entrepreneur. And he's already saying, Mario, the utility is ready right now. And they're gonna. So this is it's a play where it's essentially democratizing fashion in both the physical and the digital world. So buying their token allows anyone to launch a fashion brand in the physical world and within the metaverse. And they're already starting to make deals with different fashion brands. And designers could start using their platform today. They're going to announce that very soon. So that means their demand for their token will start from today. And that's why their token, while the market corrected heavily, their token remains between I think 4 and 7x from launch, 4 and 6x from launch. That's from the IDO price. From private sales, like 10 to 15x. So, but it's steady there. Why? Because you got buyers that are buying and holding because they want to use the token. That's why you didn't have a lot of selling pressure with Faith. That's why you didn't have a lot of selling pressure with Blocktopia. And that's the, I go to the NFT space, that I talked about what I'm bearish about. What I'm bullish about, and I could be wrong, is NFTs with strong utility, in-game assets. We bought a lot of NFTs in Sidus Heroes, the game I talked about earlier, and we're invested in that. We'll be buying a lot of NFTs in Star Atlas because all their spaceship and characters and weapons are all NFTs. That's how the game works. You own them. And we'll be buying a lot of those because they're going to have utility. When the game launches, people need those NFTs to play the game. We bought a lot of NFTs in Meta Spatial. No, sorry, Meta. People would want to know Meta Prince, which is like it's a Shopify for NFT for in-game for gaming NFTs. So anyone can create an NFT for a game. So it's called Meta Prince. We're heavily invested. So we're buying those NFTs. There's not much hype behind them. But for us, it just makes fundamental sense.
Wow. Yeah. And so before you I also noticed that you guys are involved in OneInch. That's on that's like a DeFi protocol. It's an aggregator in AMM. I didn't notice many other DeFi type investments that NFT Tech made. Maybe I'm wrong. Can you tell me what attracted you to that? Or are you going to be more involved in DeFi in the future, or what was the play there?
Yeah, so not too involved in DeFi yet. OneInch we came in because Shima Capital, good friend, gave us access to one of the earlier rounds. So we jumped in because I use the platform every day, so it made sense. I'm just a fan of OneInch, but it's an anomaly for us because it's outside our core focus, which is play and earn. And the metaverse, and eventually NFT art and collectibles when things settle down. So that's going to be our main focus. But we'll see a lot of interconnection between NFTs and DeFi because financial instruments could become and are becoming NFTs, having that uniqueness and fractionalizing them. When you fractionalize a punk, and then you can have or you leverage your punk as collateral for a loan. You can see the connection between DeFi and NFTs, and these are very basic examples. So I'm sure we'll be investing in a few platforms. We're looking at a few platforms that allow you to collateralize NFTs, use NFTs as collateral, and fractionalize NFTs. So we're looking at a few of those platforms, but we haven't made any plays there. I'm personally too excited about the metaverse. I just see it as a significantly more significantly more upside from the metaverse relative to the downside risk, and the anomaly is more interesting there.
Yeah, I could see definitely why. There's definitely explosive growth in the metaverse. On Twitter the other day, I saw a tweet that you made I found really interesting. You talked about the surplus of founders and the scarcity of devs. How can we, or what advice would you give to some founders maybe to get that a little more synchronized? What are some opportunities, or what can founders do to kind of level that out a little bit? Yeah.
Whenever there's anomalies like this, I'm using the term anomaly too many times, but whenever there's opportunities for arbitrage like this, where there's too much supply of one thing and too little supply of another, they tend to revert back to the mean. So when there's a lot of supply of founders, there's not enough devs. Well, devs start getting paid more, and then you'll start having more come in from the traditional space to the crypto space, and then the supply will increase, and then the rate will go back down because now there's more supply. And then when there's too many founders, and there, eventually there's not enough VC money to back all these founders, many projects will fail. And then founders are like, holy shit, returns are going down because, a lot of founders failed, and VCs are like, shit, it's too many there. Founders are not raising money as easily, and then number of founders will drop. So, that game will always happen, especially in crypto, because founders chase crypto. I'm guilty of that as well. I came into crypto in 2017. I've been watching Bitcoin before that, but I never came into the spaces I have with IBC and IBL and eventually NFT Tech. But I came in because I saw the potential upside there was, and I wanted to be an early adopter. So you'll see founders like me that come in for the long run and build a business. You'll see other founders coming in for a quick buck, but they're after the massive money flowing into the space. Then, of course, you've got the ideologic founders that come in because they love the concept of decentralization, which is nothing wrong with that. But that's why you got too many founders, because there's just so much money flowing into the space, like insane amount of money. And then devs will just take longer for them to come in and adapt to it, and for them to know, like a lot of devs don't understand how much premium they can charge coming into crypto because there's so much demand for their skill set. And also they need to learn, it's a bit uncomfortable for them because they need to know new languages and understand how game mechanics work in the play to earn space and play and earn space. So that kind of takes time before they can join the space.
And do you have any advice to young entrepreneurs or founders, how to separate themselves, or how to network themselves, getting themselves in front of somebody like yourself or other venture capitalists?
Yeah. So in terms of getting investors, there's no space where it's as easy as crypto right now in terms of getting investment. Okay, I'll give you a few tricks. Something we fall prey to, and probably other investors would hate me for saying this, but I'm just being honest, and then that's my weakness. We're suck-ups to scarcity. We hate missing on a deal, but we run away from a deal that chases us. So when you message us and chase us and say, "Hey, I want to show you this," we're probably going to ignore you. But when you're lie and don't be unethical about it, because then you'll just turn us off, and then we'll blacklist you, and we have groups between each other, and we'll blacklist projects there. But if you come in and saying, and as long as it's legitimate, so don't trick us. If you say, "Guys, I don't need the money, or I already have a lot of VCs, I'm happy to write you a small check if you're interested," and then I can only give you like 20K allocation or 30. We love that. When someone says, "I'm going to give you 20K," it's like a big turn on for us. Like, only 20K? No, I want more. But if they say to us, "Yeah, you can have 200K from day one," like, actually, no, I want 20K. Right. Because it's too easy to get that. Founders should be battling for the allocation. There's a project that we're investing in called Forward Protocol. Incredible founder, incredible project, and love the guys, the team there. It's like WordPress for code. And they're giving checks of like 10, 20K to VCs that are used to writing $200,000, $300,000, $400,000 checks. I've known the founder since 2017. They're way oversubscribed. So they're one of the exceptions in how well they're doing. But they're giving very small checks, and like VCs are dying. I get a lot of I've had a lot of requests of people asking me to intro them to Forward. So so treating protecting your equity. I'm in half an hour. I'm going to meet a project in an hour. I'm going to meet a project that will be incubating. It's a massive broker. We're trying to get tokens, and they're like, "No, we want to pay you in cash." We're like, "No, we want tokens." That represents a quality project because they protect their equity, they protect their tokens. We have other projects that say, "Hey, we'll give you 10% of our tokens." I'm like, fuck, okay, we don't want anything. Actually, only give us fiat. Because like, you don't value your project enough to protect the equity of yours. And with us, with NFT Tech, when we raised money, we didn't raise a lot of money now privately. We got a lot of investors wanting to invest. We're not accepting money because we want to list first. That's our goal, to list first on the stock market, and our valuation will have we'll obviously get a bump because now we've got the liquidity of having exposure to the stock market. And then we want to raise a big round that we know will raise quickly, because then will be a better valuation. So we're protecting our equity. We had the opportunity to do a deal with one of the biggest names in business. As in a name I mentioned, all of you would know. Not to the Elon Musk level, but not far off it in terms of how popular they are. And they wanted a big chunk of NFT Tech. We didn't end up doing the deal because they wanted too big of a piece. So a quality business will protect their equity. I've given equity in IBC, my other company, for the new leaders that are leading it, the new CEOs. But they have a lot of KPIs they need to meet. And the equity is not, I'm not giving a big piece of the pie because I value the equity there. Anyone that gives you too big of an equity, or if you're an entrepreneur, you're giving too big of your equity, you're turning people off and you're making it more difficult to raise money from smart investors.
Wow. Are you that's really, really fantastic advice. And something, That makes a lot of sense. You don't want to give your equity away. You want to be able to hold it. Now is NFT Tech going on the NASDAQ? Is that a NASDAQ listing or?
No, NASDAQ takes more time. So we're working towards listing on the NEO exchange in Canada, and it's based in Vancouver. But yeah, we have ambitions to list on NASDAQ, but it'll take us at least a year or so.
Wow. Are you a reader, Mario? Do you read? Do you read?
I used to read, and now I'm a podcast guy, but I went through a phase where I read a book a week.
Do you have any books you would recommend? Helpful books to entrepreneur types that you would recommend?
Especially in crypto, because crypto crashes a lot, and that's expected because it pumps up a lot as well. And the book I recommend a lot to people is "The Obstacle is the Way" by Ryan Holiday. The Obstacle is the Way, because it's a very short book. But when the market crashes, or when you get scammed like I did in 2018, it's a very hard thing to deal with. Like having your token price drop by 80-90%, or having investors run away, or when things go well, everyone loves you. Everyone chases you. Everyone wants to give you money. When things go bad, you become public enemy number one, and everyone wants their money back, etc. It's a very stressful time. Now, I saw it in 2018 when things dried up and VCs were closing one after the other. So the book allows you to put things into perspective and allows you to keep a level head despite the turbulence. So just something I highly recommend. It's a book unrelated to crypto, unrelated to business, but it's by an incredible author called Ryan Holiday, one of the smartest guys I know.
Yeah, I read he's a Stoic, right? He's got like a lot of Stoic.
Yeah, Ryan The Obstacle is the Way is a Stoic book.
Okay, great. Oh, I can't wait. Thank you for the suggestion. Well, I'm out of questions. If you got anything to plug, all your links are in the description. Mario's Twitter, his LinkedIn, NFT Tech's website, all in the description. Make sure you guys check that out. And you got anything you want to leave us with, Mario?
No, that's pretty much it. I think anyone that's interested in what we have to say and insight into this space, I'm pretty transparent. Just check out nfttech.com. So nfttech.com. And yeah, otherwise, that's all I have, man. I appreciate you having me.
Thank you so much. If you guys are still watching, remember this is not financial advice. Be sure to do all your own research. Thank you for watching, and I'll see you guys next time.